Hey everybody, what's going on? And welcome to your weekend market briefing for the week starting May 29th. Today's show, we're going to look at a few more good earnings coming still in this earnings season that's winding down. We have a tentative debt ceiling deal, so we'll talk about that a little bit. We've had a great tech rally, but where do we go from here? We're going to look at lots of charts, of course. We're going to look at some of our previous setups. We're going to look at some new setups. You might even see a name in there. You may be surprised to see me mentioning this name, but it's an interesting looking setup, so we're going to take a look at it. By the way, go ahead and smash that like button. We put a lot of work in these videos, and it really helps us out. And if you're wondering who I am, I'm Kevin D., a full-time trader, 25 years of experience, CMT Level 2 candidate, and a mentor at the investor community since 2020. We do these videos every week to keep our members up to date on what's going on and to highlight new and fresh opportunities for our members. We have a really cool community of like-minded traders. Members get to take part in live streams and live mentoring sessions. So check it out in the link down below and come join us. We'd really love to have you there. All right, let's move on. Whoops, there we go. Let's move on and get into this here. But first, quick little disclaimer, everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice, and all trading investment decisions are your own and done at your own risk. All right, starting off here with earnings. Okay, so tomorrow, Tuesday morning, nothing really. I don't recognize any of these names. Do you guys recognize any of these names? Actually, GOOGL I think I've heard of before, the one down the bottom there. But yeah, these are all, I don't know, third-tier names in my opinion. So if you recognize any of these, let me know down in the comments. Tell me what some of these names, some of these guys do. After the close on Tuesday, you see some more recognizable names. U-Haul, I don't know how important that is. I'm not sure if many people really watch that much. I think it was a meme stock for about 5 minutes, but other than that, I don't know. Hewlett-Packard, of course, that's important, and some other, second-tier names here. Before the open on Wednesday, Advanced Auto Parts, I know a lot of people watched that one. A couple other sort of interesting companies. CAE, good Canadian company, makes flight simulators. That's an interesting company, but I don't think it's not interesting for earnings. I don't think many people watch that company. After the close on Wednesday, though, this is a big one. We got kind of nothing for most of the week, and then they all pack in together after the close on Wednesday. CrowdStrike. One I'll be watching closely, of course, because I have a position in that. Salesforce, this will be watched closely. Also, Salesforce has got an AI announcement coming as well, so that's going to make that even more interesting. I think the AI thing is a special event, though. Take a look into that a little closer if you're interested in that. We have C3AI. Also after the close on Wednesday. So, with everything that's going on in AI lately, there's going to be some between CrowdStrike, Salesforce, and C3AI. These could be very volatile over earnings. Okta is another one that will probably be closely watched. Chewy. Nordstrom. Now, Nordstrom, you may have heard, is closing down all of their Canadian stores. So obviously they're in a little bit of trouble. So their earnings will be closely watched on Wednesday. Okay, before the open on Thursday, we have Dollar General. People will be looking here to see, because these are dollar stores are generally considered to be recession-proof or can even thrive during a recession. So if we see sales increasing at the dollar stores and decreasing at places like Nordstrom or Macy's, what does that say about the economy? I think Billy will be closely watched as well. After the close on Thursday, we have Broadcom. Chip stocks are going to be, important, obviously. Zscaler and Lululemon, who I read a short article today that somebody's coming and starting to eat their lunch a little bit. So that could be interesting on Thursday after the close. Some other names here as well, some other second-tier names on Thursday after the close. So that's it for earnings for the week. Let's take a look and see what we have for macroeconomic events. Obviously, the markets are closed today. I'm recording this on Monday. The markets are closed today for Memorial Day. I hope you're all enjoying your long weekend. On tomorrow, Tuesday, we have the CB Consumer Confidence Index. That's fairly important. It's good to know how the consumer is feeling about the economy, because the consumer often leads the economy. Wednesday we have JOLTS job openings. This is an important number. It gives us a bit of a preview to Friday, which is a very important day. On Thursday we have ISM manufacturing PMI and the services PMI. Very important numbers, and numbers that will be watched closely by the Fed. And you probably don't know, but the next Fed meeting is, or FOMC meeting is just over 2 weeks from now, on the 14th of June. Some really important numbers just sort of leading into that. And what's really interesting about the Fed, in fact, let's go there right now, seeing as we're talking about the Fed. It's interesting that the market is starting to price in a higher probability of a 25 basis point rate hike at the next meeting. So these are the probabilities. 500 to 525 is where we are right now. So we only see a 42% probability of staying where we are right now. We actually see an almost 60% probability of increasing by 25 basis points. This has ramifications for the market as we move forward, and I think that it's going to be difficult for the market to go higher from here if we are going to continue to price in a high probability of a rate hike. Because over the next 2 weeks, if we're going to get a rate hike, this needs to move up to 100%. Or will move up to 100%, and it's hard for the market to go up when this is going up at the same time. So that's something to keep an eye on here. And if we move out to the meeting, to the July meeting, we can see that we add here the 51%, and the 7 and the 23% here. We're up to about a 75% probability of a hike by the July meeting. That's, between these two meetings, that's close enough to 100% for me. So definitely worth keeping an eye on this, and I will keep you updated. We'll look at this again next weekend. All right, back to our economic events here. So that was Thursday, ISM, services, and manufacturing PMIs, and we also, as always, have unemployment claims on Thursdays. Now on Friday, non-farm payrolls. This is really important. This is something that the Fed is going to be watching closely as well. And obviously the market will too. We'd like to see a little bit of softening in the jobs market, but not too much softening. We don't want to see the economy, rushing into recession or anything like that. So a little soft in the jobs market means that probability of a rate hike could come down a little bit, and that would be good for the market. So there you go. Those are our events for the week. Oh, and also, finally, the coming up on Saturday, the Fed head quiet period begins. So this coming Saturday, they can't go out and yap their heads off like they're going to be doing all week long this week. And I really look forward to that day, because it's just nice to have, even if it's only a week and a half long, to just have a week and a half in the market where you don't have these Fed heads out there and you don't have these sudden bursts of volatility in the market. For what often seems no apparent reason, and it's because some Fed had said something. So that'll be nice. I'm looking forward to that. All right, let's take a look at our short-term market regime tracker. As you know, we're looking really at the last 1 to 3 weeks of the market, using some quantifiable metrics. This isn't predictive of where we're going, really. As you watch the trends in this tracker, it can help you, give you an idea of where we're going. And currently, right now, we're sort of right in the middle of this bullish chop. As you know from just looking at a chart of the market, you can see that it's been quite choppy lately, but it is on the bullish end of the scale. And if we continue to grind a little higher here, then we'll start moving up into some solid bull trend. But I'm not entirely sure that that's where we're going. All right, let's take a look at the markets now. We'll look at the major indices, international markets, important commodities, our major sectors, and we'll look at some setups. Let's start with a chart of the S&P 500. All right. Now, as you can see, we are in that sort of choppiness that I was talking about. But there is definitely, we are in an uptrend. We are in what's getting to be an intermediate term uptrend here. Now, it's not a super, it's not a super quick uptrend, and it does have a lot of chop in it, but it's an uptrend nonetheless. And I guess we kind of need to adjust this uptrend line here. We should bring this down to, I'm going to actually put that right on there. Yeah, I like that one. Okay. So you can see, we are making higher lows. We've had some higher highs, and it looks like if we continue higher tomorrow, that we will break out to another higher high. As you may have heard over the weekend or yesterday, McCarthy and Biden came to a tentative deal on the debt ceiling. Congress still needs to vote on this. If we look at the futures, because the futures are open today, the futures opened last night, as they always do on Sunday night. And went up a bit, not a ton, and is showing a little bit indecisiveness. And I think the futures are also showing us that getting to a deal was mostly priced in. I know there's a lot of people who expect to see a giant rally. We're going to explode tomorrow and go much higher, and I don't know if that's going to happen, just because the real risk was to the downside here. If they were unable to get to a deal, then yeah, we were going to go down. But is there much upside in coming to the conclusion that we all expect? We've all expected them to get to a deal. So I'm not sure how much upside there is in it. And like I mentioned earlier, there is that risk of a rate hike coming. And we'll be working on that for the next couple of weeks. So some people are saying it's going to be a sell the news event, and I disagree with that as well. I think there may be a small pullback eventually. I think we rally a little bit, maybe a day or two, and not a very strong rally. And I think the weakness in that rally says, we were supposed to explode here. We were supposed to go out to new all-time highs. Oh, I better start selling. And then we see a little bit of a pullback, and I think it's going to be really minor. I think this trend line that we see right here holds. I don't think we're in any danger here at all. So that's the S&P 500. Let's look at the NASDAQ. Look at the QQQ ETF, and of course, this is where all the action has been in the last couple of days, with NVDA exploding higher on their just unbelievably amazing earnings and forward guidance. We'll take a look at the NVIDIA chart a little later on. This uptrend here is really accelerating, probably getting a little bit stretched. You can see that we've basically closed this gap that goes back over a year now. Yeah, about 13 months or even 14 months. Yeah, almost 14 months to this gap here. I think we can get rid of that, but I think we have to put a little bit of a resistance level in there. Notice how on Friday it stalled right at the top of that gap. So I'm just going to put a support resistance line right in there, coming right off of this here, and there we go. This is minor. I think we can get through here. Probably will go through here on Tuesday, and maybe come up into the bottom of the next gap. But this is going to need a bit of a rest. This is this is a fairly decent move in the last couple of days. A little gap being left behind here. I'll get that in for next time. So yeah, watch out on the Qs here. Any minor pullback, a small pullback, or sideways action or rest is fully expected in this one. IWM, the Russell 2000, not participating. We had a bit of a green day on Friday, but that's about it, right? It's still very much firmly in its range, not participating in this rally, because this rally was all about tech. It was very narrow. Breadth was not great on it. It was a few stocks and almost all of the mega cap stocks, the cause of that rally that we've seen. So, these small caps have got to step up here. And we may see that. We may see if the Q starts slowing down, if some of the mega cap stocks start slowing down, then we may see some rotation into these small caps. So hopefully see some rotation into these small caps because they really need to step up. Now we look at VIX, it's saying there's no danger ahead. We had started to move up a little bit as things were getting testy in the debt ceiling talks, and you can see as things started to sound a little better, things became more optimistic, and we had a nice big move out of the Qs. Then we can see the volatility index came back down again. If we look at the 10-year yield, we can see that this has been climbing steadily for a couple of weeks, and that's all about the debt ceiling talks. This is the bond market pricing in the potential that they might not get to a deal. A small probability that they wouldn't get to a deal, and that's what you see here. Now, as we have this deal, we should see this roll over. Wouldn't surprise me to see us roll over and over the next week or two come all the way back down to this major support level. Let's take a look at our dollar index, and pretty much the same thing here, right? You see that same uptrend there. As things start to improve in the debt talks, we can see we stall out, and I would not be one bit surprised to see this roll over now. Let's, while we're here, take a look at our dollar cost averaging system. We are looking at weekly charts now. This is the SPY ETF, and you can see all systems go. If you're in a dollar cost averaging system, you should continue to average. Same goes for the Qs. Look at this weekly chart here. Look at the acceleration to the upside. This is a thing of beauty here, but you can see it's extending away from these moving averages. So that is a sign to be a little cautious. And finally, we'll look at IWM, these small caps, and these still haven't turned green here. Haven't been able to get above those moving averages. Haven't seen the MACD cross over to the upside, although it's very close to doing so. It's only going to take a little bit more of an up move here, and this will cross over. We might see this turn green by next week. All right, let's go back to our charts here and look at ACWX. This is the All World Stock Index, less the United States. And you can see we had a couple of bad days here when things were getting sketchy on the debt ceiling. Basically global equities started to sell off, and you can see we had a bit of a bounce here on Friday in this. EFA, Europe, developed Far East and Australia. Same deal happened here. Fell out of its consolidation to the downside. Even fell all the way through, actually, this uptrend line, which is a little surprising, but it did catch the 100-day moving average, and it bounced off of there on Friday. So good to see it back above that trend line. We need to see it hold above this trend line and now go and get back into that range it was in and then finally break out of it. EMCX, this is emerging markets less China. Interestingly, this didn't fall apart as much as some of those larger indices did. And you can see that we've tried to break out. We've had this long pennant formation here, this long symmetrical triangle. And it tried to break out of that, kind of failed, but didn't fail too badly at all. It got caught by its 21-day moving average, and then on Friday we had that nice big gap up and a go. We should look at this area here for resistance. Yes. Okay, watch out coming into this 52 area. But this does look like it's going to continue higher, which is a really good sign for a global economy, really. When emerging markets are finding some strength, we can't be too bearish. All right, FXI, this is China large cap. And you can see this fell right out of its consolidation as well. It broke through major support and recovered a little bit on Friday, but it's not looking great for the China large caps here. All right, let's move on to some commodities. We'll start with gold. And gold has been moving to the downside, continues to move to the downside, and probably will. Inflation fears aren't too high right now. If there's a debt ceiling deal, we don't have that flight to safety that gold often represents. So I think we've got continued weakness ahead in gold. Now, that being said, we've got the miners have come into a major support level. And so far, for 2 days anyway, have found support there. But it really doesn't look good, does it? You know, when we have come into supports before in this ETF, we often see a bit of a V bottom. So who knows? I mean, maybe we rocket higher. For this to rocket higher, it would need gold to rocket higher as well, though. And I don't know. I just don't really see that happening. I kind of wouldn't be surprised if we break down out of here, and maybe we come and test this 200-day moving average. Let's take a look at silver. This one did have a little bit of a bounce on Thursday, but you can see, a lot of weakness in here as well. And we'll take a look at copper. This has been weak too, but this one bounced. When did the bounce in this one started on Wednesday? So is this leading the other metals? Is this leading the more precious metals? I don't know. I mean, this is firmly in a downtrend here. And it's not looking good. And with copper not looking good, it's not looking great for the global economy. And I think a lot of this has to do with China and everything that's going on in China. So hopefully we can see China's economy improve, those China's large caps improve, and when that happens, we will see copper go higher. But we should maybe be starting to keep our eye out for an opportunity here. We are in an area we don't really expect to be. All right, let's look at oil. This is crude oil. Not a lot going on here, just really kind of choppy, slight upward trend to this chop, but really nothing going on. Natural gas, we were looking at this nice rounding bottom in this, and thinking that, hey, maybe there's a chance this goes higher if it can get through that resistance level, and it completely failed to get through there, and it just fell right off. And you can see that we've got some momentum to the downside here. Wouldn't be surprised to see a test of this support level here. I expect this support level to hold. If it doesn't, look out below. So that's the most interesting thing going on in the energy complex at the moment. Not even going to look at most of the energy ETFs we normally look at, because there's nothing going on. They just look like crude. The one we will look at though is TAN. This is looking pretty weak here. If this level fails, I think it's going to catch enough momentum so that this level fails as well, and we may come all the way down here into the 66 area before we find some support. So there could be a play in the ETF, or the short side play, obviously, or maybe some of the solar companies themselves, like First Solar or any of those. You might want to take a look at if this chart interests you. To the downside. Now, let's go into our major sectors and start with consumer discretionary. This was looking pretty good here. Nice uptrend. We had this long consolidation. We broke out of it, came back, tested the breakout level, and then on Friday had this nice move up. Now, we've got some important pivots here. We've even got a pivot right here that we were unable to get through. I mean, look at it, stalled right out there. Let me draw that in, so it makes more sense for you if you can't see that. Sold perfectly, almost to the penny on that previous high. So a little bit of minor resistance overhead, but this looks like it's going to go higher. That was consumer discretionary. Let's move on to industrials. There is nothing going on there. We've just got a bunch of chop, support on the 200-day moving average. I think there's more sideways out of industrials. Not very exciting. XLF. Kind of holding their own. We've got we've got a couple of higher lows here, but we've also got lower highs. So we should actually probably just draw that in as a triangle. Here, something like, oops, that's messy. Sorry about that. Let's get there. That's what we wanted. And this one here as well. There you go. That is that's the area we're pretty much looking for a breakout of. I suspect this breaks out to the upside, but I think this is gonna need more sideways first. It's just been so much shock to the system from financials that it needs time to recover. KRE, the regional banks, pretty much the same deal going on here, right? I mean, you know, we look like we're putting in higher lows, but again, we've got that series of lower highs, just like in the financials themselves. So, same deal, you know, keep an eye on this. Actually, I don't have that there. There we go. Keep an eye on this triangle, but I wouldn't be surprised if this just broke sideways out of this triangle, and you know, at some point that ended up looking more like that. You know, after some more sideways action inside of here. Again, just needs time to repair itself. XLV Healthcare. This one has really been falling off a cliff. May have found some support here. Doesn't look awesome though. Might need to come down and test this level again. XBI Biotech. Kind of the same thing here. We've seen, you know, a little bit of pullback here. Funny thing about biotech is I can show you tons of charts where you've got stocks at all-time highs or at a high level and putting in really nice consolidations, you know, just below a resistance level, say something like there, and look like they're ready to break out. There's lots that look like that. But when you've got the whole sector, the sector ETF kind of looking like it's trying to roll over here, breaking out of the downside of its upward channel, we need to be cautious in that sector. XLR REITs, and these are, you know, we're getting into the defensives, and these were all quite weak. Weak as the market rotated quite strongly into more risk-on assets and the mega cap tech, and you can see that here. You can see that in REITs. You know, keep stepping down. Will it continue to step down? Probably. Kind of looks that way. Staples, the defensive sector. Look at the plunge here in these staples. Kind of shocking, but did find some support right where it should. Got a bit of a lift from Costco on Friday to help it at this support level, and we're going to take a look at Costco a little later. Utilities, pretty much the same deal here. Very weak in the utilities, and you know what, we're okay with this. We're okay with all these defensive sectors being weak because it means that the market is rotating into riskier sectors. You don't rotate into riskier sectors when you're bearish. All right. Now, what they were rotating into, technology. Look at this. So we were already in a pretty nice uptrend. We were stepping up, you know, pull back a little bit, step up again, consolidate, step up. Very well behaved. But you can see now we are starting to, we've accelerated quite a bit, getting a little bit stretched here in my opinion, moving a little too far away from all of these moving averages. Now, can we go higher? Yeah, we can, and I think we might. But we've got to watch out. You know, we've got some all-time highs overhead up here. We've got, we're going to have a minor resistance level here. If we get there, let's get that one marked in around 170. You know, if we do continue higher over the next couple of days, and I think this is a good chance we will, watch out for this 170 level. I think that's where this could stall. Now, if it did stall there and consolidated, you know, 170 to 163 and a half in here, that would be really nice, because that would set us up for another move higher. I'm not in the camp, obviously, that we're in a tech bubble right now. This may be the beginning of a bubble, you know, with the semiconductors, which we'll look at in a sec. In fact, I'll go on to the bubble talk when we get into the semis, because that's where all that's coming. Well, semis and AI is where all that bubble talk is coming from. Let's move on to our communications sector. This is doing quite well, you know, certainly being helped by everything that's going on in the other tech sector, or you know, technology stocks, with regards to AI and chips, helping out here too. This looks like it will go higher, although there's a little bit of a minor resistance overhead, but kind of a nice little bit of a bull flag had formed here. If we like zoom in on this a little more, and if you were actually to look at this on a 65-minute chart, I think you'd find that it looks a lot better. You can see how that flag set up in here, and then broke out of that. Oops, Yeah, it was a nice little flag setup in there, and then you kind of had a flag within the flag, that resulted in this nice big bar here and a move higher. I think this continues higher. Let's go back to the daily chart. All right. Okay, where to next? Let's go to semiconductors. So this is where all the action was on Thursday and Friday. I mean, look at this massive gap up on NVIDIA's earnings, and continued higher on Friday, and looks like it may still want to go higher yet. Now that was a fairly 145 is a fairly important resistance level that it just went through like it wasn't even there. We need to watch out for this all-time high at 159.41. I think we're going to move into there. It probably not at this pace. It will probably slow down a little bit. May not even get quite there. May look at some of these highs here, which are probably worth marking in. Right there, 157.50. I would watch that number if this continues higher up into this area. But I really doubt that we're going to get through this on the first try. We'll probably come up in here, pull back a little bit, there'll be some profit taking, and go sideways for a little while before taking another try at that. But I don't expect any bubble bursting or anything like that going on in here. This whole AI thing is just beginning, in my opinion, and this bubble could inflate for a couple of years. Often these bubbles do. They can take a long time to inflate, and things can continue to run. You kind of need to find a place to get into some of these stocks and to participate in this, because it's not going away anytime soon. I heard an interesting report a couple of days ago that ChatGPT version 5 is currently being tested on $200 million worth of NVIDIA's, and we'll actually go to NVIDIA, $200 million worth of NVIDIA's latest, most expensive chip. So that's a nice little bit of revenue, because ChatGPT is not the only one going to be using that chip. Everybody else is going to have to step up and move into these these bigger, stronger, faster chips. At $200 million a pop every time you want to bring in a new version of your AI. That's some really nice revenue jump for NVIDIA. So here we are, NVIDIA. You can see this big gap, huge gap on earnings. What was that, 25%? I think it's up 25% now from where it was on Wednesday at the close. You can see we are through all-time highs. Guess I should probably grab that and move that over to here now, as we have a new all-time high in here. Why is that misbehaving? There we go. All right, there's our new all-time high at 394.80. I think the best thing now, I think NVIDIA is going higher. I think because just the potential for the revenue increase that they're seeing, and what I just talked about with the $200 million worth of chips, one company doing AI. Needing to purchase that, and they're all going to need to purchase that. The future is very bright for NVIDIA. Now, what I'd like to see is this put in a nice little bull flag here for a week or two, even maybe. Give us a chance to get in here, maybe a little bit of a pullback. There is no way we're closing this gap, though. This is going to go higher, in my opinion. We just need a chance to get in. Any pullback, there's going to be people like me who want to get in this, because I'm not in this. Luckily, I was in SMH Semiconductor ETF before that took off, so I've got a nice gain there, and I've got some other holdings, and obviously I've got I've got some tech stuff going on too that's really benefited from all of this. But unfortunately, I wasn't in NVIDIA. So I would like to get a long-term position started in this, because I think this goes for a while. Let's move on from that and go to Meta, which continues to grind higher. You know, certainly helped by everything else that's going on here, but what a beautiful uptrend in this. A little bit of acceleration on Friday, of course. Let's look at Apple. Even Apple is being helped by all of this. Good uptrend. Tested a little bit on the uptrend. Found support there. Coming into some resistance at all-time, or not all-time highs, but at this pivot. But I think that this is showing us it wants to break through here. Really good relative strength to SPY, although flattening out lately. Amazon. We even have this breaking out of the top of its channel. It tried to break out before, pulled back into the channel a little bit, and is now moving up again. Let's just adjust this channel, and it will really need to go. If it's going to break out the top of the channel here, it needs to go now, because that is acting as resistance. If this does start to roll over, we might come down and test the bottom of that channel. Netflix. This is kind of in its own little world here, although it did have a great day on Friday. You can see after that move, nice little bull flag, and it's moved again, and it looks like it wants to get through that resistance level. We'll see. We'll see what happens on tomorrow on this. It's going to need some help from the market, though, I think. And we do have, we've got this big old gap area overhead that it's going to have to get through as well eventually. Google, looking nice here. Really nice run up here. Once once they seem to resolve their AI issues themselves, that started to run up a bit, pulled back, consolidate, all good. Right under resistance, looking for a breakout here. Okay, who's next? Microsoft. Another one of the big winners in AI. Look at this trend, though. And look at this trend accelerating, right? The trend started down in here, and then we accelerate a bit more, and then we accelerate some more. This kind of acceleration just isn't sustainable. Now, I'm not saying it's going to completely fall apart or anything now, but I would not expect as we come into these highs up in here. So we've got a high at about 344, and then the all-time high just under 350. Don't expect it to get through there on the first try. It's going to need either some sideways consolidation or some pullback before it can get through there. And then finally, Tesla, moving up slowly. I think there's better places to be than Tesla. What's going to happen when this gets to the 200-day moving average, which is just below a major resistance level? Do you think we're going to get through there on the first try? I don't think so. I think we're going. I think best case scenario is this goes sideways for a little bit. It may even roll over and pull back, maybe to test the 21-day moving average, which will be somewhere up into here by that time. Okay, let's move on to some of the plays that we like to watch. One of those is HIMS. And HIMS basically fell off a cliff. It started with earnings. Earnings were not terribly impressive. It consolidated nicely for a while, and then that consolidation broke. And it also broke its 50-day moving average. That's where I closed out, as I've mentioned before. This is where I closed out the rest of my position. I mean, I've been closing out the position coming into here, into these all-time highs. Because they were options, they were leaps that I'd bought ages ago. They were starting to run out of time. Still a couple months left, but when things start to move down and there's only a couple months left in those, the options value decreases very quickly. Once this broke and closed below the 50-day moving average, that's when I got out of this. Thankfully, just in time not to suffer through that day right there. Okay, so it's come down. We've got yeah, this is an important support level here for it, and it did bounce just above that. But you can see on Friday, it came up and it drew that gravestone doji. That doesn't look good. That sort of suggests it rolls over some more, and it may need to come down and test this 850 level. If that fails, I think the 200-day a test of the 200-day moving average is in the cards for this one. So jury's still out a little bit here. The earnings weren't that bad. I mean, it should. I think this is an overreaction to the downside, even. So, I think we probably just need to consolidate and go sideways for a little bit before this sets up and then goes continues its march higher. But for now, this is hands off for me. And unless something exciting happens in this, unless there's a nice little setup, we may not look at this one again for a little while. Uber is one that we've been watching. We were first mentioned it. Watch out for this bull flag. We had a minor breakout of that. Came down, found some support right at the apex of that, and moved up. But it was basically a one-day wonder. Tried to break out the top of this range. And failed completely, came back down, tested the apex again. We've got the 21-day moving average here. So I think we've got some more sideways consolidation here to before we get a decent setup out of this. It's not quite ready yet, it's telling us. But it's still worth keeping an eye on. I think what I'd like to see is it to come up to here and go sideways for like a week, and a nice tight consolidation up in there. Then I'd buy the breakout. But if it goes, if it just rushes up into here, I don't think I want it. I think you're going to see another gravestone doji like that, another huge selling wick. Okay, VLO. This is Valero Energy Corp. This was what we thought would be a decent short. We were looking for a break out of the downside, out of the bottom of this this wedge here, and it just continues to wedge. I still think a breakout of the downside of this could be a really nice move, and it could be a big move to the downside. Could happen quite quickly, so I think worth keeping an eye on still, especially if the energy market rolls over or the entire market rolls over. This could move quite quickly to the downside. Another one that I think could see a quick downside move. Now, we did get a bit of a move out of here. I mentioned this, to watch for a break of this level. And we did get a little bit of a move there. And if you caught that, congratulations. I expected more. I didn't think the 200-day moving average would support. I thought it would get more momentum to the downside. And I still think this company, or this, sorry, not the company, this stock is in trouble. The company, I think they're going to suffer from some declining revenues. These things always seem to be a bit of a fad to me, and a fad that comes and goes and ebbs and flows. And I think that right now it's ebbing, and we should be looking for more downside. So watch what happens here. And on another break below this 200-day moving average, I think that's when we see some momentum, and momentum that probably eventually brings us down to this 80 level. All right, so some new setups. One that you may find a little surprising is GameStop. I kind of like the way this chart is setting up. I hate that it's setting up like this in GameStop, but sometimes you don't get to pick the company or the stock where you see your nice setups. So as you can see here, we've had a nice double bottom in here, and then we step up and we put in a higher low. Had this big break higher on earnings, and then pulled back, but that's where we got our higher low after that pullback, and we continued higher. Now we came into some major resistance here. No surprise at all that this little move stalled right there, but it's set up a nice little bull flag right now. So let's just zoom in a little more. We've got this nice, what are we up to now? 4-day long bull flag here, right under major resistance, right under the 200-day moving average. What I'd love to see is another day or two really tight in here before breaking out. But we may not get that. This could go tomorrow. This is better though. If the longer this goes tight and sideways or stays in this flag, the better, in my opinion. But again, that it may just decide to break out to the upside, and when it does, I think that could be worth playing. This still has pretty decent short interest here. This is what, 22% short interest? That's not bad, and I think it could be I think it could catch some people off guard if it broke out, through this major resistance and the 200-day moving average. Will catch some people off guard, and there could be a quick move, at least up into the 28 level here. So worth keeping an eye on. Coursera. It's an educational software company or educational services. This one you can see has been, or had that big gap up on earnings, pulled back, didn't quite fill the gap before finding support, mostly around the moving averages and then moving higher from there. This one is early yet, in my opinion. I would like to see this go sideways for a while, maybe even all the way to this downtrend line, and you can see that this downtrend line actually goes back to just a matter of days after the IPO. Let's fix that. There we go. That's better. The downtrend line started just days after the IPO. You can see since this IPO, it's just down, down, down. Look at this double bottom here, though. Should have drawn that in beforehand, shouldn't I? Nice double bottom in here now, and it's putting in the beginnings of an uptrend. We got higher low here, higher high, higher in all these here. So I think the tide has turned on this one, and could be an opportunity, to get into something for a while. Even the fundamentals on this company don't look too bad, actually. Do that research on your own, of course. But what I'm looking at least initially, is this nice little bull flag that seems to be forming the beginning of a consolidation, and right on top of the 200-day moving average, the 100-day moving average. Go sideways for a little bit more. Let some of these other, the 21-day moving average catch up here, and then we could get a nice break out of this and a nice move here. Interestingly, the short float on this is actually quite low. It's only about 5%, which is a little surprising. You would think that it would be lower, and that's another thing that makes me a little bullish on this stock in the longer term. The shorts just aren't here in this. Okay, let's move on to one more. Costco. Now, these guys had earnings on Thursday after the close. I actually want to show you the response to their earnings. Here it is. This is the earnings release itself. Big move down. We're looking at a 5-minute chart. And then that totally reversed, and I think this was the beginning of the call here when this started to reverse, and just jumped way up, pulled back a little bit after that, and then after the open, just started to move higher and just kept going higher all day until right before the close, when we had a minor pullback. And minor pullback here is no big surprise coming into a long weekend after a move like that. I think this is going higher. I think that the earnings were soft, but the guidance and the call was good. Or sorry, the guidance wasn't that great either, but the call was good, and it showed that management has got things in control. So let's go back to our daily chart, because this is just a really nice setup. You can see the Costco, okay, is basically just almost always in an uptrend. We have these periods of sideways consolidation, maybe little pullbacks. Pullbacks on the scale when we're looking at this sort of scale. And we've now been in a sideways consolidation really since August of 2021. So coming up on 2 years now. And that has been tightening up, as you can see here. really starting to tighten up in here. We had a nice bounce off the bottom of the triangle here, of the pennant that's formed, and then with earnings, a big move up to the top of it. I think we continue higher. I think we break out the top of this, and this could be the beginning of the next leg of an intermediate to long-term uptrend. So I think this is worth keeping an eye on. I'm not sure if this is going to give you a chance to really get in, and you know, if you're waiting for a pullback down to here again, I don't think you're going to get it. You might get a pullback sometime down the road, you know, into here, which is going to be around this level anyway. So it's risky, but it's a good company. I actually started I normally don't do this, but I was very confident. I started a long-term position in this down here. I've had long-term positions in this before. I'd gotten out of, completely closed it out, and I think it's time to get in, for me anyway. It's time to get in again, and I started that position with a little taster right down here, and you know, got a little lucky with those earnings, and you know, I've got a nice little start on this, and I may add to this. If we can break out above this level, or say this level here, might be places where I would consider adding to this this position. And that is it for stocks that we want to look at. Next thing we want to go to is, and I just realized I forgot to throw the June calendar in here. So, but it's not quite June yet. On Wednesday, we're going to be doing our live ticker talk session for our members. We're going to go through the tickers that our members want to look at. And our members always come up with some really interesting stocks. So, you know, if you're not in the Discord, check it out, the link down below. We'd love to have you there. We have a lot of fun. We have, you know, and some really interesting ideas are brought forward for us to trade in and invest in. So that's in our Discord. And finally, I would like to thank everybody for coming and watching. Hit that like button, share with your friends, and subscribe. Enjoy the rest of your long weekend, and we'll see you again soon.